Welcome to Recalculating Small Business. Like its award-winning book, Recalculating is dedicated to small business in America. Your hosts are Don Mazzella and Dan Perkins. Don Mazzella is the editor-in-chief of the Small Business Digest. Dan Perkins is a registered investment advisor with 43 years' experience in managing money.
Dan Perkins here, your co-host, along with Don Mazzella of Recalculating for Small Business. Our radio program is dedicated to you, helping the small business owners increase their profits. We draw our name from Recalculating, voted the best small business book of 2017 by the Independent Press. In this book, it features ways to grow your small business. Now, here's Don Mazzella.
I'm Don Mazzella. My co-host, Dan Perkins, is on assignment. But today, we have Kevin Boyles with us. He's Vice President at Millennium Trust, a very interesting financial institution that's put together what I consider one of the more interesting surveys of the year. Kevin, welcome to the program.
Thank you very much, sir. Glad to be with you.
Kevin, before we go any further, tell us a little bit about your background, a little bit of background on Millennium Trust, and where people can learn more about the survey and about the Millennium Trust.
Sounds great. Thank you. So a little bit about myself. I actually am a fairly recent addition here at Millennium Trust. I joined the firm back in May. Prior to that, I spent the previous 18 years working for a company called Ascensus. Ascensus is the largest independent 401k record keeper and administrator in the country, and they're one of the larger overall record keepers for the retirement services industry. So I spent a number of years selling 401k plans, and before that, servicing financial institutions in supporting their efforts to be able to offer IRAs, health savings accounts, and all types of employer-sponsored small business retirement plans, large business retirement plans, not just 401ks, but all other types of plans. I was brought over to Millennium to launch a product that we're calling Workplace Savings Solutions. It's essentially a bundling together of what we're calling a sub-401k solution set for businesses that aren't quite big enough or don't have the financial appetite for a 401k plan. And Millennium Trust is launching this product as part of our retirement services initiative. Millennium Trust is a trust company. We've been in business for just about 20 years, and we're located in suburban Chicago. The original core business of the company was of being a trust company, which means they were and are a custodian of hard-to-value assets, alternative assets, and other things that are difficult to value and that require specialized trustee services. They launched a retirement services product about 14 years ago, and my product is now kind of an adjunct to that. So in support of the launch of that product, that was really the impetus behind us launching this survey, because as we were building out the product suite, we went looking for data on employers that don't offer any kind of retirement savings option to their employees today. And amazingly, we couldn't find any of that data. There are tons of employer surveys out there, but they're generally only aimed at employers that already offer some kind of retirement arrangement and trying to figure out, the demographics behind that, the motivations, costs, all those kinds of things. So we decided to go out and get the data for ourselves. So we did a far-reaching survey, actually two. We did the one we were just talking about. We went out and surveyed employers with between 2 and 150 employees that currently offer no sort of retirement savings arrangement for their employees in the workplace. And at the same time, we thought, since we're going to go do that survey, why don't we also go survey employees that work for companies that don't offer any sort of retirement savings benefit today? So that's what I'm on to talk about today, is some of the findings from those joint surveys. A lot of it corroborated what we see in the other surveys and studies that are out there, but there were quite a few things that really jumped out that were very different as well. So that's kind of the background on Millennium Trust, Kevin Boyles, and the Millennium Trust Small Business Retirement Survey.
Well, can you give the website and where people can also see these surveys results?
Yeah, right now we have a certain amount of the survey results are out here. The website address is www.mtrustcompany.com. That's M as in Mary, trustcompany.com. And then when you get in there, there's a menu where you can do offerings. And under offerings, you'll see Workplace Savings Solutions. And if you click on that, that'll go to the page that highlights some of the survey results. We will be continuing to release more of the survey results. It was extremely comprehensive. So keep checking back. We'll be releasing more data over the next couple of months.
Well, before we go any further, two questions popped out. Who did you do the survey with? What company did you use?
We commissioned a company called Site Research. They specialize in small business polling and surveys.
And the second question is, you said you offer sub products. Well, what do you mean by that?
Well, what we mean is 401ks are outstanding. They're a very powerful tool for both employers to offer something meaningful as a retirement savings benefit to their employees, and they're great for employees that do have access to them. But 401ks come with a certain amount of cost associated with them because there's a lot of complexity around the compliance testing and the administration of those plans. So what that does is oftentimes prices those plans out of reach for small businesses that don't want to spend the kind of money that it takes to offer that plan. So when I talk about sub 401k, there is a universe of additional solutions that most employers really aren't even aware of that are out there. And those would be things like a simple IRA plan. So simple stands for Savings Incentive Match Plan for employees. So that's like a 401k, but it's much less expensive to operate. It has lower contribution limits, and it's not quite as flexible as a 401k is. And then we have simplified employee pensions. Those are SEP. Maybe you've heard of those. SEP is available as well. Those are generally more for family-owned businesses or businesses that would like to do a profit-sharing plan, but again, don't want to spend the money. And then finally, something that's really caught on is not doing a plan at all, but rather offering payroll-deducted IRAs to your employees. So the employer really doesn't put any money in, only the employee does, but the employee can set up to have an IRA opened and fund that IRA through payroll deductions at their employer. So that's kind of what I'm talking about. And then the payroll-deducted IRAs have kind of come into vogue over the last 3 or 4 years, primarily because a handful of states across the country passed legislation several years ago and began offering state-sponsored payroll-deducted IRA programs for employers. And 3 states already are making it mandatory for certain-sized employers to participate in those programs if they don't offer their employees anything. So, for example, the states of Illinois, California, and Oregon have those programs today.
Well, we have to have you come back and talk more about those at another time because they're clearly of interest to our audience. But let's get back to the survey. So what are the top line from the survey results that you'd like to share with us?
Sure. There are a handful of, I would say, 3 sort of key outlier headlines that kind of just leapt right off the page when we got the survey back, and maybe I'll go through those real quick. The first one was we kind of knew going in that we would see this, but the data was more dramatic than we expected, and that is that small businesses that we surveyed were aware that there are retirement savings options available out there, but they don't and didn't really understand what the options were. Now, we expected the second part of that. We didn't expect the awareness to be as high as it was. And keep in mind, when we surveyed, these employers had between 2 and 150 employees. So in our findings, 76% of the employers that we surveyed said that they were already aware of retirement options other than 401ks, so all the things that I just outlined a minute ago, or at least some of them. But on the flip side, only 23% of the employers that we surveyed, it's almost the exact opposite number, had researched offering anything other than a 401k. So in other words, there's this peripheral awareness by the business that there are these things out there, but they're so, nebulous or difficult to understand or confusing that nobody understands how they work, that everybody went out and just researched 401k or did nothing. So in our survey, 55% of the employers we talked to researched doing some sort of retirement savings option, right? And in that population, north of 80% of them only looked at 401k. So knowing what we know about the cost, and in my years in selling 401k plans, what we found was a lot of times I would go in and, I'd go into a small business. I can remember one pretty vividly where it was they basically created hydraulic nozzles for oil rigs. It's kind of fascinating when you sell employer plans, all the different businesses you get to interact with and learn about things you never really thought about before in the manufacturing space. So these guys were like, well, we want to offer something for our employees. And the employers themselves, the actual owners of the company, wanted to be able to save as much as they possibly could as well. And they wanted to look at a 401k. And when we got to the end of it, the cost was just simply too much for them. Well, at the time, the company I worked for, all we sold were 401ks. So our conversation was pretty much over. I didn't really have anywhere else to send them, at least not that benefited me. And at Millennium Trust, we've tried to take all of those other options and consolidate them into a very easy to understand hierarchy with a tool, a digital online tool that the employer can use to answer a few basic questions to tell them which one's probably the best fit for their business.
Well, is that tool available today?
No, it'll be available right after the first of the year.
You have to come back and talk about that with us.
I would absolutely love to come back and talk about it. I mean, it's, again, because even now that I've laid out these options, payroll deducted IRA, SEP, simple, 401k, that's still too much for anybody who's trying to run a business as their day job to try to figure out what all of those things mean and how they work, right? It's much easier to have somebody come in and do that. So the tool is designed to not only show the solutions that we at Millennium Trust offer, but to show the entire spectrum of what's available, including full-service 401k plans. So we didn't want to limit it to just what we have to sell. We wanted to make it a holistic, very flexible tool that would allow the employer to really see what they need. So that was probably the first thing that jumped out was there was more awareness than we thought, but confusion. I would say the next thing. Oh, yes, sir. Go ahead.
Kevin, can I ask a quick question? Is there any minimum number? Is it 2 or more, 1 or more, 10 or more employees? Is there a minimum number in some of in these offerings?
The short answer is no. The number of employees that the company has is probably going to be one of the driving numbers behind what differentiates one of those solutions from the other, and there are maximum numbers. So a simple IRA plan, for example, you cannot offer one if you have more than 100 employees. But there are no limits or concerns. And then if you're an owner-only business, and we're seeing a lot more of those now, I mean, even before the quote-unquote gig economy took off, we already knew there were roughly 18 million owner-only or sole proprietor businesses out there in the U.S., and we think that number is going to go even much higher. I mean, I just saw an article in Forbes the other day where they're claiming that 50% of the U.S. workforce will be 1099 contract or freelance in 2020. Yes. So if you think about the traditional 401k space, right, those people don't qualify for that because they're not actual employees of the company.
Correct.
So these solutions, so there are no minimums. You can be a sole proprietor and open up an individual 401k plan or a SEP or a simple. The differentiator is really, especially if you're an individual, how much do you want to be able to save or how much can you save as a percentage of your income? If it's less than 25%, you really don't need a 401k plan. If you want to get more than 25% of your gross income put away, that's where 401ks really allow you a lot more flexibility because of the higher contribution limits and so forth. So that's why we're building the tool.
I hate to keep interrupting you, but you raised some questions. I was told about something, and I thought it was a SEP IRA, where for individuals over who are retired under one plan and are over 65 and collecting from one IRA can create a what I was told was a SEP IRA. But are you aware of that, or am I all wet?
No, I think what you're talking about is Roth IRAs and traditional IRAs both have limits at the individual level. Roth IRAs are limited predominantly by income. So only people that fall in certain income ranges can actually have Roth IRAs. But you can open a Roth IRA at any age, and you don't have to be employed, or you can be retired or whatever, as long as you have income equal to the amount that you're putting into the IRA. Traditional IRA, the standard IRA as we've known it for almost 40 years or over 40 years, does have an age limit. You can't open a new one after you're age 70. So no new money is able to go in there, even if you have earned income. So what a lot of people that have earned income do that are self-employed or have supplemental income in retirement is they open a SEP IRA, which is technically a traditional IRA. The SEP is just a type of contribution that can go in there. But to be able to do that, you actually have to have business income that translates either to earned income or business income that you can put in on the business side.
I'm sorry to keep interrupting you, but we seldom get such a great expert as you on. So, but please, let's go back to your survey. And you have to, after the first of the year, you have to come back and we have to talk more. Please talk more about the survey.
Okay, so just a couple of other key findings that we took away that I think your listeners would be really interested in. I mean, first, again, we kind of went in thinking we were going to ask a question about why don't these employers offer anything today? And what we thought we would get certain answers back, and we got the answers we thought we were going to get. But when we put them onto a pie chart, they didn't look the way that we thought they were going to look. So we gave people essentially three choices on why they didn't do something. One was money, too much money to offer one. I have a lack of understanding of what all these things are. And then the final thing was, I'm too busy running my business. I don't have time to deal with the administrative complexity of offering some kind of additional benefit to my employees. So we kind of thought that the time factor would maybe be first or second, money would be second or third, and the lack of understanding would be second or third. And what was funny in the survey findings was 2/3 of the respondents came back and said money. So cost was definitely the biggest factor with the smaller business community. So that ties back to they went out, 55% of them went out and looked at 401k plans, ended up doing nothing. Well, now we know why, because they saw how much they cost, didn't know there were other options available, or were too confused by them. By contrast, only 22% said they had a lack of understanding, and on the time, only 11% said they didn't have time to deal with it. So that was a little bit surprising for us.
We're talking with Kevin Boyles of Millennium Trust. He's here with a fascinating new survey. Please continue, Kevin.
Sounds great. So the last key point that I would highlight would be that 80%, we talked about this a little bit earlier, that 80% of the employers that did research on offering something looked at a 401k. And so what we think happens there, and it's borne out in some of the other questions within the survey, is you're an employer, you want to look at a 401k. Well, where are you going to go for that information? You're going to go talk to your CPA, your financial advisor, a company that sells 401k plans, or let's say an investment provider like a mutual fund company. Well, what I would tell you is they're all really good at selling 401k plans because that's what they have. And 401k plans are great for the businesses that they fit, but 401ks aren't always the right fit. So it was a little surprising to us to see that many people looked at it, but it really underscored why we're building what we're building. And then, we talked about the gig economy thing, right? where over half of the workers in the U.S. within the next couple of years are probably going to be independent contractors or freelancers. That's problematic for 401ks. And now the 401k industry has kind of come back, and along with the Congress in Washington, and there are no less than a half a dozen pieces of legislation sitting on Capitol Hill right now as we speak. A couple of them are likely to pass within the next, probably by the time the Congress flips over in January. Most of them are centered around the idea of expanding what's called multiple employer 401k plans. So this is a measure designed to make access to 401ks cheaper and easier for smaller businesses, and it's a good thing. So what it means is where today if I have a business with 110 employees and I want to offer a 401k plan, I pretty much have to go it alone. There are rare cases where if I'm part of an association or some other broad affiliation group, I can do what's called a multi-employer plan. We call them MEP for short. They want to greatly expand that to loosen those association or common ties to make it easier for smaller employers to band together into groups to offer 401ks, and then they can reduce the administrative cost and burden as well as the compliance and all the other things by doing that. And at Millennium, we think that's a great thing, even though we don't really, it has nothing to do with products that we offer. That's going to take the 401k universe and make it more accessible to a certain layer of employers that are probably just not quite able to do it today. So let's say you're a business with that 110 employees and you've been hemming and hawing. Now it's 40 to 50% cheaper to do it. You're probably likely to do it. But what if 40 to 50% isn't good enough? What if you're more interested in no cost? You're a company with 15 employees or 20 employees, and still several $1,000s a year to offer a 401k plan is still too much for you. That's what we built solutions to kind of fill that void, because the state programs where they are helping a little bit. This expansion of MEPs will help a little bit, but they're kind of the two ends of the spectrum, and we're trying to fill the big hole in the middle, if that makes sense.
You're making tremendous sense. We're talking with Kevin Boyles of Millennium Trust. Kevin, please continue.
Sounds great. So what about when it's not a great fit? Let's go back to some of the survey data. So even though we know that the multi-employer 401k plans can lower the costs, right? It's still going to be time-consuming and relatively expensive for certain businesses to offer something. So when faced with the choice of paying and offering something or not offering anything, we already know, because we surveyed these people, they're doing nothing. What can we do to get them to do something? So the question we asked was, what if you had access, your business had access to a retirement savings option? Now notice I'm not using the word plan, I'm using the word option, because plan implies some sort of employer-sponsored arrangement that's more complex, like a 401k or a simple plan. But what if you could offer some sort of savings option to your employees that didn't cost the business anything on an ongoing basis? There was no hard employer cost to offer it. 86% of the employers that we surveyed said they were interested in offering some sort of IRA-based solution. So that simple SEP or payroll-deducted IRA that had no ongoing cost to them as an employer. 70% said they were likely, if they had access to something like that, to do so within the next 2 years. And finally, 76% of them, even though they said they want something that doesn't cost the employer directly a lot of money, 76% of them indicated that they would be willing to share in some of the costs that their employees would incur for administrative fees on the IRA accounts or whatever. So on one hand, that was encouraging. On the other hand, it's a little confusing, because the survey said they didn't really want to offer a plan unless they didn't have to pay anything. But then on the other hand, they're willing to pay 76% of them at least part of their employees' cost to have these things. So what it tells us is, between the lines, that employers want to offer something. They see value in offering something. And I think your more progressive small business owners also realize that we're in a tighter job market than we've been in for the better part of a decade, and that we have a new demographic group coming of age in our workforce, and we all know them lovingly as millennials. And I'm sure you've had other guests on your show that have talked about millennials. What was funny when we started talking about cost sharing with employees, when we talked to millennial business owners, that 76% number went up to 82%.
So they're more interested than their older contemporaries.
Yeah. So at the business level, millennial business decision makers came back with some really interesting, and maybe if you don't mind, I'll share 4 different findings we had where they really went against the grain of the rest of the people that responded to the survey.
Please do.
Be glad to. So the first one is 84% of them considered having a retirement they said they considered having a retirement savings option for employees as important. Just asked that way. The general survey population, only 77% of them replied that. Next up, 82% of millennials said that they felt that having some sort of retirement savings option, as opposed to nothing, would help them attract and retain talented employees. The rest of the survey, 72%. 91% of millennials said they would be likely to offer a program if it didn't have any cost to the business directly. The general survey, 70%. Big gap there. And the final one is 60% of the millennials indicated that they were interested in having a financial advisor help them. And that one shocked us a lot because historically the surveys done around millennials' engagement of financial services shows that they, generally speaking, harbor a little bit of a distrust for the financial services sector versus, say, Gen X or baby boomers. So we were surprised to see this number this high, and not only was it high, it was higher than any other age group in the survey. So they came back at 60%. The total survey came back at 44%. So that number really stuck out for us as well. So when we flip, go ahead, Don.
No, you're the guest. Finish up.
Next up, let's flip to the other side of the survey where we talk to millennial workers, because I think your listeners are probably more interested in what the people that either are working for them or will be very soon.
We're going to have to invite you back because we've run out of time,
okay.
Unfortunately. We're talking with Kevin Boyles from Millennium Trust. Kevin, your website again for people?
Yep, it would be www.mtrustcompany.com. That's M as in Millennium, mtrustcompany.com. And then to get to the section with the survey information, you go to the offerings bar on the top of the website, and underneath there's a place linked to Workplace Savings Solutions. And you click there, and it's got some information from the survey, as well as a high-level description of what we're putting together to service these small businesses.
In the new year, Kevin, you have to come back, and we'll devote another section to your new products and to, more importantly, more of the survey and more information, because you almost overwhelmed us today with information, but we thank you for it.
Well, thank you very much, and I hope everybody has a great holiday season.
And Kevin, we'll talk again. Your website one more time.
www.mtrustcompany.com. That's M as in Millennium, trustcompany.com. And then go to Offerings, Workplace Savings Solutions.
A link to that website will be on recalculating.biz tonight, where you can hear this and every other past and future program, and you can tell us some guests you'd like to hear. But Kevin, thank you. Really great information, and we'll be talking to you soon.
Sounds great. Thank you so much.
Want to know more about health savings accounts for your company or yourself? Go to 2hsa.com and get a free employer's primer. Health savings accounts are a cost-effective way of offering health care benefits to your employees and yourself. HSAs build retirement funds for your employees, improve morale, and reduce your health care benefit cost. For a free employer guide to HSAs, go to 2hsa.com. That's 2hsa.com.
Dan Perkins here from Recalculating.biz with your featured book. I want to tell you about a recent interview I had with Bob Bethel, a turnaround specialist with lots of success in small business. Bob's new book is Strengthen Your Business, Fail-Proof Strategies for Small Business. He tells us of his life successes and failures that have made him and his clients so successful. Over the years, Bob has brought 77 companies back from the brink and changed them into thriving, profitable businesses. His energy is amazing, and at 74, he proves that you can still have a great deal to give others if you just try. His suggestions are easy to understand and very helpful. One insight struck me was that most companies do not have a plan. The old Chinese proverb says, "If you don't know where you're going, then any road will take you there," is true today. Bob Bethel's book, Strengthen Your Business, can be found at Amazon.com or can be ordered at your local bookstore. This has been Dan Perkins with your Recalculating.biz featured book.
I'm Don Mazzella, and my co-host Dan Perkins is on assignment. But Marcus Jacobier is here with us today. He's an extraordinary individual with what I consider a very extraordinary message. Marcus, welcome to the program.
It was a pleasure to be here, Don, and thanks for having me on your show.
Okay, Marcus, first of all, tell us a little bit about yourself, then a little bit about your company, and equally important for our listening audience, your website, and then we'll go from there.
Amazing. So I'm gonna try to summarize and make the long story short, right? So I'm a Brazilian immigrant, and although I'm a Brazilian, my life wasn't always a carnival. And I came to the United States and pursued to the American dream in 1998 with $100 in my pocket in a big dream, right? I had all kinds of odd jobs. I work in construction. I work in a restaurant. I bought stables. I become a chef. In a year and a half after I have arrived in the United States, I had my own restaurant with 13 employees. Beginning to investing in real estate, early 2000. By 2000, 2004, I had about 12 properties when a friend of mine gave me a book called The 60% Solution. And he said, Marcos, you should read this book because it talks about, interesting investment strategy. So I thought I already knew everything about real estate. I thought I parked that book in my office, and that book stood there for 5 years. I kept doing what I was doing. By 2007, I had 17 properties. The bubble burst, the market crashed, and I went broke again. I was working at that time for a company called FEDEX. You probably heard of them, FedEx. Yes, I was a truck driver for 14 years. And make the long story short, 5 years after my friend gave me the book, I was cleaning my office. I found the book, and I start my career in tax liens and tax deed investment. And I became a trainer, a speaker. I'm a dad of 2 beautiful kids. And now I travel the world teaching people cutting-edge strategies to create financial freedom. So I call myself a wealth hacker, per se.
And your website?
My website is marcusjacober.com. You can find me on Facebook, Freedom Boss TV. We have a very cool project that we launched this month. I bought myself an RV, and I'm going to be traveling all 50 states and teaching people on the road what's possible, and how to create financially freedom in 180 days.
Oh, Marcus,
very excited about that.
We'll get into that. But Marcus, spell out your website. This is radio, so spell it out.
Okay, so it's MarcusJacober.com. MarcusJacober.com.
A link to it will be on Recalculating.biz tonight. Now, let's back up. Winston Churchill said, success is the overcoming of a series of failures. And it seems that you also proved that adage. So let's go back a little bit. You got this book off the shelf. You read it. You decided you can improve upon it. So what is the basis of your strategy and what you're talking about?
Okay, so you're right when you pronounce that quote. I did have a lot of failures, and a combination of those failures, that's what got me where I'm at today, right? So I got the book. I learned about tax liens and tax deeds, that the two oldest form of investment that ever existed in the United States, even before the United States was a country. Get this, we had a tax liens and tax deeds before, but it's only known by 5% of U.S. population, mainly because it's ignorance. There's not a lot of information out there, and people don't talk about it because the counties, which promotes all the auctions and have all those properties, they're not in a business to run auctions. They're in the business of collecting taxes. So there's not much information out there. So I was able to read the book, and I start my journey as an investment, doing my own investment. Then I become an investor, and I don't say by accident, but my career as a trainer and a speaker, it started one day when I was at an auction, and I saw this lady. She was going to lose $30,000, and I approached her talking about failures, right? And I approached her, and I said, "Don't buy that property." And she looked at me. She was very mad because she thought I wanted the property for myself. And she kept bidding on the property. And the reason why she didn't buy the property is because somebody else knew less than her and has less money, and had more money than she had. So at the end of the auction, she came and talked to me. She was very aggravated. And how dare you tell me not to buy this property, blah, blah, blah. And then I started, showing her the mistakes that I have made in the past and made me a very successful investor. And she was going down to the same path. And we chat a little bit, and she asked me, "Marcos, can you teach me everything that you know, everything that you have learned, all the mistakes they have made, so I can be more successful on my path?" I said, "Oh, I never thought about that, but I guess I can do that." And I started teaching her little tricks and hacks of those two strategies. She became very successful, and she brought a friend, that brought two friends, that brought four, and becomes 8 and 16, and now I teach this and I talk about this topic in 4 different countries, 5 if you consider Texas.
Okay.
That was a joke, by the way.
Well, okay, Marcos. So let's back up so I understand. When you say invest, what do you invest in?
Okay, so most people don't know this, but we have 3,144 counties in U.S. And every month, counties across U.S., they offer properties, the county-owned properties, that you can acquire by basic paying the taxes that's owned on those properties. So I have over 900 transactions in my portfolio. Get this, I was able to acquire a property for $28.10. That was the lowest amount of money that I pay for a single property, $28.10. And I acquired a property that's now worth $1.7 million, and I only paid $6,342.79. And people don't know that we have thousands and thousands and thousands of properties available, even in your own backyard, if you're listening right now, that you can acquire from the county with little or not much money.
So let's back up so we understand what you're saying. So you're saying that the 3,000 odd counties, when they dispose of property, for back taxes or liens or whatever reason, you go in and try to buy that for the back taxes amounts, etc. Is that the basis of what you're saying?
That's correct. And you can either buy the property or you can either buy the lien. If you focus on the lien, you can make up to 24 to 36% return per year, guaranteed by law, right? So it's kind of like you lending money to the county. And I even have a challenge everywhere I go, if you can prove to me there is a better investment strategy than tax liens out there, and you can execute that strategy, and you can guarantee me that I can have anywhere from 24% to 36% guaranteed by law, I'll give you $1,000, $10,000, by the way.
Yeah. So again, so just so we understand ourselves, again, so you find through either a publication, online, etc. And let's say in Kansas, a Kansas county is disposing of a farm property because the owners haven't paid the taxes, and you go in and bid on it, and then hopefully you win it and either turn it around and resell it or keep it in your portfolio. Am I hearing you correctly?
That's correct.
Okay.
That's exactly what it is.
And you've been very successful at this.
Yes, I have. Like I said, I have over 900 transactions in my portfolio, and that I executed. And now I travel the world, showing people the secrets about those two strategies. It's funny because I have walked through a lot of different local RIAs and real estate investment groups, and even people that have been in the business for 20, 30 years. They don't understand how those two strategies work.
Well, it seems to me it's pretty straightforward. And again, let me see if I understand it, Marcos. Somehow or other, you find out where these sales are, and you either go and in person or bid via online for for these properties. And if you win it, you in fact pay it and then go on from there. Did I hear correctly?
That's correct. So get this. So every month or every year per se, we have 30 or 40% of property owners that don't pay their property taxes on time. And the county needs the money to run all the services, right? School, policemen, firemen, roads, etc. And imagine if you have a business where 40% of your customers don't pay their invoices on time. You're probably going to be on the red, right? So what the county do? The county wait a certain period of time. It could be 4 months, it could be a year, it could be 4 years, depending on which state. And if the homeowner doesn't come forward and pay the taxes, you have two strategies. You can buy the tax lien. So basically, let's say Joe has a house that's worth $200,000, and Joe owns $1,000 in taxes. So I go in and I tell the county, I say, look, I want to pay Joe's taxes. So I write a check to the county for $1,000, and the county put that on the record. And when Joe comes in and pay the taxes, the county is going to say, look, Joe, you being late, now you got to pay 25% penalty, for example. So instead of paying $1,000, you're going to have to pay me $1,250. So the county collects the money, and by law, the county sends me the money, the investor, the $1,000 plus $250, which is my return on my investment, right? So that's one of the strategies. If the time frame that the county allows Joe to come forward and pay the taxes expired, now as an investor, I can have the $200,000 property for my investment of $1,000. So basically, I have a $200,000 asset backing my $1,000 investment. And let's say that Joe had a mortgage on a house and he still owes Bank of America $150,000. Get this, because the American law is based on the English common law, and the king and the queen has to get paid first, that mortgage on that property gets wiped out. So in other words, I'm going to receive the $200,000 property free and clear of any liens or encumbrances based on my $1,000 investment.
Well, that's very true, but I happen to know in New Jersey that they've passed a law which protects the mortgage holder on that. It's my understanding. I've heard of this before, and by the way, we're talking with Marcus Jacobier. He's got a very interesting approach to earning money, which is, if I understand correctly, to purchase liens and/or properties from counties, and he's made quite a living at it, and now he's offering it as a course. Marcus, your website again for people?
It's MarcusJacober.com, MarcusJacober.com. Just comment a little bit when it comes down to protecting whoever has the mortgage on the property. So, going back to the common law, right? So the king and the queen has to get paid first because the United States is based on a British law, right?
Right.
In order for you to own the property free and clear, in order for the bank to not to lose its interest in the property, the county has to do something called the due process of law. So everybody gets notified, and everybody has enough chance, enough time to come forward and protect its interest. It's going to be a time that the county and the law is going to say, look, enough is enough. And if you guys don't come forward and protect your interest, I'm going to have to transfer that interest over to the investor. And that's what I've seen happen in every single state, in every single county. As long as the county does the due process of law, there's no other law and no other piece of legislation that protects either the homeowner or the bank, because it all comes down to personal responsibility, right? You can only drag this thing for so long. So that's one of the ways to make money.
Well, yeah, but that's but I believe here, and again, I'm not as expert as far from an expert on it, but the in order to protect its interest, can't the mortgage holder pay you your back taxes and have the property free and clear?
That's correct. So when a tax lien is issued on a property, the first thing that the county does, the county notifies all the parties that have financial interest in the property. It could be the bank, it could be the homeowner, it could be someone that has a mechanical lien on the property, maybe a contractor that did some work on the property, right? So the county notifies everybody. But if you understand how the mortgage system works, once you take a mortgage out of a piece of property, most likely that bank is going to get that mortgage and sell to another financial institution. That's going to sell to another financial institution. That's going to sell to another financial institution. And they're going to bundle that and offer as a financial product on Wall Street. We all know about subprime loans and what happened in 2007, 2008, right? So what happened is, the county has the only obligation that the county has is to notify the mortgagee, the bank who wrote a mortgage on that property. That's recorded at the county, and most of the time, and we see this happen more and more often, where the mortgage exchange hands so fast that the information is not being updated fast enough in the county record. And that's why we see, because of the bureaucracy and miscommunication, we see a lot of banks losing its interest on the properties.
You know, that's very interesting, and it's very true what you're saying. And then what we're seeing here in New Jersey, and again, I can only speak for New Jersey and what I read in the newspapers, is that after the foreclosure, et cetera, and you taken over for lien, for the lien on the taxes, the banks have come back and sued the new owners and said, no, we have an interest, and then the lawyers take over.
Yeah, they can't. It doesn't happen. Look, if the due process of law has been taking place, there's nothing they can sue. They can do whatever. There's nothing that they can do. I have many cases. I'll tell you this. Just last month, I bought a piece of property at auction, and it was a very fast fix and flip. It was just carpet and paint, and we did that in about a week. And the following week, I went with the realtor to look at the property, take the pictures, and list it, right? Because I'm always buy and sell it. So I noticed when I got to the to this condominium. So I paid like $20,000 for this 2-bedroom, two bathroom condo on a nice lake, and that was worth $200,000. So when I put my key on the door, I noticed that my key didn't work. And it was a red sticker at the door saying, call the 1-800 number, whatever, right? So I called the number, and there was a third-party company that answered the phone, and they were like, I would like to inform you that you're being late on your mortgage. This call is being monitored, and this is a tentacle like that. And I let them talk, right? And then at the end, they say, your condo is being prepared. It's going to go to the auction block by the bank next week, because you have failed to pay your mortgage. And then I said, look, I think you guys are mistaken. I'm the new owner of the property. And the guy from the other side was like, what do you mean you're the new owner? Well, you guys are 2 weeks late. I just bought this property at the county auction for back taxes. And I can almost hear the guy on the other side of the line breathing deeply, and like, oh my God. And I said, look, you guys have 24 hours to come back here and put my lock back, or you guys are going to hear from my lawyer. And sure enough, the next morning they were there. The locksmith was there. They put a new lock. They gave me the key, and I never heard from Wells Fargo ever again.
Oh, well, you just named the one that's really screwed up, Wells Fargo. Well, we all know. They have really screwed up, big time. But you're absolutely right. But to see now, to take the other side, we're talking, by the way, with Marcus Jacober, who's got a fascinating business. That again, your website, so people can learn more. Marcus
is MarcusJacober.com. MarcusJacober.com.
Okay. We only have a few minutes left, but what you are talking about, it takes many people have seen that red sticker on the condominium. They would have been immediately scared, etc., and not as strong as you were with them. The interesting thing, we describe small business people as people who can who are willing to jump off a cliff and hope that somebody constructs a swimming pool before they land. And it's obvious you've learned to jump off that cliff, but a lot of other people can't. So in the couple of minutes that we have left, what do you tell your audience to give them the courage to do what you did?
So it's very simple. Everything with knowledge equals power, right? So when you know something and you know how things work, you become powerful. And most of the, let's say, the fear comes from lack of knowledge, not knowing the next step, not knowing how the system works. And I'll tell you this, the system is being rigged and is being designed so we all can fail. Make sense? So if you have if you have the knowledge and you acquire the knowledge and you actually eliminate the box, right? I think people that think outside of the box, they're already behind the curve. Now we need to eliminate the box completely. And once you combine those two elements, thinking outside the box with knowledge, and all the new trends and all the new stuff that's coming in place. I would love to come back to your show and talk about how you can make money without owning a piece of real estate. How about that?
Well, let's stick with the basics over here. Because you're asking people to make a big leap of faith and do what you're doing.
Okay, yes. So, but again, once you don't know what you don't know. So when you know how the law works, when you know how the system works, you are able to go in 5 simple steps right? From nothing to acquire your first property, turning it around, selling, renting, doing whatever you want. Get this, out of the 3,144 counties that we have in the U.S., each county holds on average 500 to 5,000 properties that you can acquire right now. You can walk to a county, write a check for the back taxes, and you're going to walk out of that courthouse with the deed of a property. And some of those properties has been in the county for 20 years, and nobody knows about it. When you do this, everybody wins. County needs money to provide services, right? Neighborhoods need some investors that can come in and make the neighborhood better and fix properties and doing all this stuff. And at the end of the day, you make money as well because you took that first step.
Marcus, I just wish we could go further, but your website, unfortunately, we're run out of time. Your website again for our audience?
Okay, my website again is marcusjacober.com, marcusjacober.com. Look me on Instagram, look me on Facebook. As we go and travel the entire United States, I'm going to go to New Jersey. I want to make sure I visit you there. I have a very good story in New Jersey. That's where everything started for me. I have a restaurant in Kearney, New Jersey. And just follow me. I have a tons of free content that I share to social media and my website. It's going to be a very exciting journey.
Well, thank you so much. A link to your website will be on recalculating.biz tonight, where you can hear this and every other past and future recalculating program, and you can tell us who you'd like to hear. Marcus, thank you so much for being with us.
Thank you very much. It was a pleasure to be part of your show, and the world needs more entrepreneurs and people mind like you that like to spread the word and put good content like this on air.
Thank you for the compliment, and thank you. Have a good day, Marcus.
I appreciate it. I hope to see you soon.
Dan Perkins here for Songs and Stories for Soldiers with your Veterans Tip of the Day. Did you know that the suicide rate for women vets is 12 times that of their sisters in civilian life? Did you know that 1 in 4 women vets feel uncomfortable about talking to people about their mental health issues? Did you know almost 600,000 women vets in America are suffering from PTSD? It's time to help. It's time for all of us to encourage our sisters, mothers, and wives to get help by contacting their local VA hospital, clinic, or community-based health care center. So if you know a woman vet that is suffering, go to va.gov and find their nearest VA facility. This has been Dan Perkins of Songs and Stories for Soldiers.us with your Veterans Tip of the Day. Dan Perkins here from Recalculating.biz with your small business Tip of the Day. Small business funding is easier these days thanks to a new breed of lender called fintech lenders. These internet-based lenders cut the time between applying for funds and getting the funds to just hours instead of months. They also make it easier to repay your loans, but their costs might be a little higher for their service. The next time you need dollars for your small business, try them. You might like the change. I'm Dan Perkins for Recalculating.biz and your small business Tip of the Day. Dan Perkins here from Recalculating.biz with your small business Tip of the Day. Is it time to get a real webmaster? You may find that you wear many different hats in running your business, but if the internet is an important part of your business strategy, then you might want to consider giving that hat to someone else to wear. You can buy some inexpensive internet packages, but they all have limitations. Some small business people get frustrated because of the limitation on formats. They feel like they're trying to put a round peg into a square hole. Check with other small business professionals and ask them, who are you using to run your website? Make some calls, set up some interviews, and tell candidates what you're looking for. Here is the tip of the day. Ask for references before you meet with those people. Check them out and see how they've done. Look at a minimum of 3 candidates if possible. The oldest and the biggest may not be the best fit for you. I'm Dan Perkins from Recalculating.biz with your small business Tip of the Day.
Thank you for joining us on Recalculating. We hope the information you received on today's episode was helpful to you in starting and growing your business. Please go to our website, recalculating.biz, to contact us, to listen to past shows, and see special offers. Until next time, remember, if you grow, we grow. Join us next week for more helpful ideas to make your business a great success. Recalculating, a program designed to help you be successful.